Hi everyone, in this video we're going to look through chapter 2 homework and spend some time going through the problems. So with that said, let's begin. Okay, so for the first tab, it's mostly just, a matching exercise, so nothing too difficult there. Hopefully, read through the book, look through the notes and slides, etc. And yeah, I'll let you all. I don't want to steal your thunder there for solving those or rob you of that educational experience, but let's get into some of the other problems here. So on the second tab in Excel here, problems 2 through 5, we've got the following journal entries to record for the accumulation of costs. And so for the first one, if we were purchasing raw materials on credit or on account from wholesaler company. So remember that whenever we see on credit or on account, that's going to indicate that we've purchased on to our accounts payable liability account, and increases to our payables accounts are credits, and you can kind of, indented. So select the right selection there for accounts payable. I wonder, because I think you could pick. Yeah, see, that one doesn't, even though it is the accounts payable account, remember that your credits are all need to be indented. So if you end up picking the right or the same, accounts payable, but you're not getting rid of the X, maybe that's one of the issues. So there's two selections for each type with an indented or not, kind of debit or credit, basically. Okay, and we are purchasing raw materials. So again, that raw materials are going to be our and we got the little slider off to the side here, so keep that in mind. So raw materials inventory, keep in mind that raw materials is an inventory account, it's an asset, and so we debit that to increase. Explanations are already put in for everyone. For our second, we're paying factory rent, and so remember from our work so far that rent is a component of manufacturing overhead or factory overhead. In this slide down, we've got manufacturing overhead. Oh, I didn't pick it. You've got manufacturing overhead. So, hopefully that makes sense that we're in the debits there. So it's pretty easy to identify with that. In this one, it says we paid, it wasn't on account or anything like that. So cash is going to be our credit there. If we're accruing our utilities, remember that an accrual entry is a recognition of a liability for an expense that has not yet been paid. So I can start there. And then this is going to be a factory utilities invoice. So we got to think about, okay, where does factory utilities go? Remember, it's factory utilities, not office utilities. And so it's going to be a product cost, one of those three components: direct labor, either direct materials, or again, manufacturing overhead. And that is the right answer there. So if we debit our manufacturing overhead account, you'll see the X's disappear. And then we've got depreciation of equipment totaled $60, and of this, 80% is factory related. So this one we got to do a little thinking. I'm going to put our credit in first. Accumulated depreciation. Remember that that's kind of a unique account for depreciation expense, and it's, there's not a payable or cash associated with it, right? We're just recording a contra asset. That's a contra asset account that we are crediting to increase. Okay, and then we're going to split some of this out and say, okay, 80%. If 80% is factory related, remember that that's the manufacturing overhead essentially, and we can do our formula directly in the cell here. So we can do equals 60 times 0.8 or 80%. And then we could do another formula just to say what 80%. Oh, no, that didn't work. Wrong. The total minus the 80% gives us 12. Let's see. Why did that not go away? Let me figure that out. Okay, but we wanted to hit depreciation expense. Oh, it just waited until that was there. Okay. So you could also do, equals 60 times 0.2, for example. But what we're trying to say is, remember that if it's factory overhead or factory depreciation, it's going to be a product cost that goes into our overhead account. And if it's office related depreciation, which we're assuming, whatever the other 20% is SG&A, sales, general, and administrative, then that's just going to be normal depreciation expense. Again, if this was utilities expense for the office, we would just have utilities expense because it'd be a period cost and it would go directly onto the income statement. But reminder that when we're calculating raw materials, we are allocating a portion. Those are the product costs that are going to go into the cost of the materials. Okay, and so we're using those accounts, either direct labor, direct materials, or raw materials, direct materials, raw materials, or overhead, which a lot of those were the overhead accounts. Okay, now let's take a look at exercise number 4. Exercise number 3. Now we're going to want to record the journal entries to assign the costs. So in this instance, we're moving the cost of raw materials from the raw materials account into specific jobs, and we want to do the journal entries for those. So we're going to be debiting our work in process, our WIP account. If you'll remember, kind of the flow that we had in chapter 1 was the raw materials, the total manufacturing costs going into the formula to calculate the cost of goods manufactured, right? So in our work in process inventory, we've got $96 for specific jobs. So we've got that portion of it. And then this is coming out of raw materials inventory here. So let's go down and that's the total. So we need to add those together. So 96 plus 24. So $120 of materials was used. And basically 96 of that was direct materials for specific jobs, and $24 of that was manufacturing overhead, right? And the component of the manufacturing overhead that it was indirect materials, right? We looked at that in chapter 1. Okay, then we're going to do some journal entries for assigning payroll costs. And so in this instance, we're going to want to debit our, and it's a, let's see, we got, okay, so 520 of direct and 48. So again, that could be the supervisor versus the employees, the direct versus indirect is important there. And so again, the direct is going to go to the work in progress of 528. And then the indirect becomes a component of, again, missed it there, manufacturing overhead of $48. And then factory payroll, we will credit for 192. Wait, sorry, not 192. What was I? Sorry, no. Looking at something else there. Okay, of 576. Just the summation of those two, again, basically. Okay. And in the final problem, we want to say predetermined overrate is 180% of direct labor. So if we look back and see what direct labor we had, looking back here, we say, oh, okay, it was 528. We can even use a formula here in Excel. So we could select that 528, times it by, was it 1.8, 180% essentially. And then that's going to move that portion of all the work in process, the manufacturing overhead into into the WIP in inventory account, and then the work in process. Oops, sorry. I was saying WIP when I selected that. We're moving it into WIP, or we're moving it out of the manufacturing overhead account. So we're assigning the overhead essentially in those. Okay, let's go down to exercise number 5. So in number 5, we completed 2 jobs costing a total of $720 to complete, and we received $1,380 payment. And so we've got kind of some, compound kind of entries to record. And the first thing is to move our on 331. The first one's moving it into finished goods from work in progress. So our finished goods inventory of $720, and we're just kind of lumping those together on the general ledger. They would have their own subsidiary totals, but we're moving those out of the work in process inventory. So just moving through the different asset accounts. And then we received, I wonder if you picked AR. Do we have accounts receivable? Oh, sorry, we received the cash. Yeah, so if it said we sold it on account, we would use accounts receivable, but it says we received the cash in this instance. And so this is kind of thinking back to your accounting too. You got cash, and then you got sales, so revenue. And we want to, that's one part of the sales entry. And if you remember, sales are always kind of a 2-part entry, to where we've got cost of goods sold as an expense. And in our instance, we have, not 1380, but that was the 720. And then we need to reduce our finished goods inventory by the same amount. So that's kind of just, moving through the whole process of all those from production, right, of some of these costs into overhead, raw materials inventory purchase, and then the direct labor portion of it down here, and the manufacturing, indirect and direct labor portion there. And we're moving some of the raw materials inventory that we purchased previously, right? We had the 120, so we moved the whole 120 out into some various categories. So the raw materials inventory can include direct and indirect materials, so keep that in mind. That's one thing to note. And in problems, that we'll look at, you'd have to be here. It tells us directly, the labor and what's indirect, but we'd have to look on like a timesheet or some sort of report to be able to break that out on the homework problems, etc. Usually, if you're in the real world, there's automated systems that would allocate those costs, with the push of a button, basically. But the system would have to be programmed to be able to, read the information or be programmed correctly. So basically, we're then moving all of the work in process, the manufacturing overhead using the predetermined overhead rate that it tells us. And then the very final step is we need to come down and close out our cost of goods sold, not our cost of goods sold, but our manufacturing overhead account, by determining whether we've got to credit that or debit it, essentially, right? Is it over or under applied? And so when we look back, what we need to see here is we've got, let's look above. So we've got manufacturing overhead application of $950.40. And then we need to offset. So if that was our amount of our credits, then we need to look and say, what was our total debits? So our total debits to manufacturing overhead were, we have a 48, we have a 24, We have a 180 and a 720, and so I think that was everything. Oh, and we also had the depreciation. So you can kind of do this on scratch paper off to the side, or the T accounts are helpful here. We're just looking at the journal entries. So when you're looking over or under applied main overhead, it is kind of handy to have this separated out onto like a T account, kind of with the manufacturing overhead account shown. But we'll try and do it this way. So we're adding all the, if we were, think of this as your T account. So everything on the left side, all the debits equal 1020. And then the credits were $950.40. So we underapplied our overhead because we actually incurred 1,020 of actual costs, right? And then we using our predetermined overhead rate only allocated $950.40. So we need to bump to close out manufacturing overhead. Then I'm actually going to do a Control X to cut. I'm going to put that here. Whoop, here we go. Okay, and what I want to do is take the difference. We want to get the manufacturing overhead up to match what the debits were. So the credits are that. So let's add the parentheses. So again, that's our total debits is what we're showing here. And then we're going to subtract the credit that we've already booked. And we'll see if we did it right. Okay, the X went away. That's a good sign. And so let's go manufacturing overhead. We'll practice this in class. It's easier to do this kind of work when you have a T account, like I said, where you can actually just see all the debits and credits to manufacturing overhead more easily. But then we just close that out to cost of goods sold. We already did our calculation. But hopefully that makes sense where you can see what we're really doing, and if you had the T account, you would see all the debits to overhead for the real costs incurred, which is this one, this one, this one. We had the manufacturing overhead from raw materials there. This was rent, utilities, depreciation, indirect materials. Then we had indirect labor. And then we had, I guess that was it. Yeah. But then we assign the overhead cost based on our predetermined rate, which is a guess, right? So then we have to get to the end of our whole process and say, how close was our guess? And it was this close. We allocated out $950.40, and we actually incurred, whatever it was, 1,000. Let's see, if you took this off, then we know we actually incurred 1,020. So I might have said that backwards. Maybe we underapplied the overhead. I always get confused on those. So these terms are a little, what I focus on when I'm doing these kind of problems is just what's left over in what do we need to debit or credit manufacturing overhead, to get it to close. And it can be on either side depending on whether you did over or under apply it. So using that T account kind of in that instance, or little notes off to the side, is really helpful. But now hopefully you see, so if you took your credit and your credit, that would equal to the same as your actual debits here. So this plus this plus this plus this plus this. So hopefully that makes sense. We'll do more practice with that quite a bit in class and so on and so forth. So, okay. Let me take a look at our next problem. Okay, numbers 6 to 7. And so JoJo Co. had the following balances and information for October. And so we got a whole bunch of just, random stuff in here. And we want to calculate out the cost of raw materials used. And so some of this is kind of back into, chapter 1, and just keep practicing that information, definitely important. And so what we want to figure out as far as the raw materials goes, remember it's the beginning plus the addition minus the ending. And when we're talking about raw materials, we're talking about work WIP, right? So beginning, we're going to equal 9, and we added in our raw material purchase of 180, and you see that here. So that's 9 plus the 180, and then our ending raw materials is 45. What did I miss? So we had beginning. Oh, sorry, that's beginning WIP. My bad. Okay, beginning gets a little. There we go. So make sure you pick the right number. It's a little frustrating on these. I mean, I like these problems because you can get instant feedback, but you can't like link to the actual cell with the numbers, so you got to be careful. So sometimes if it's an error, you're right. You might have just typed in the wrong number. So that was the case there. Okay, cost of direct materials equals raw materials, indirect materials. And so in this instance, we're going to want to say total overhead costs and backing out some of the other indirect, basically. So I think that's what we're going for here. So if we say 162, let me do a formula. 162 minus, or just our, we just want our cost of direct materials. So so our other overhead costs minus our, so 162 for our other overhead costs minus the indirect materials. So cost of direct materials equals raw materials minus indirect materials. So that one's a little tricky and confusing. So anyway, that was how we calculated that out. Cost of direct labor, factory wage, and minus the indirect labor. So on this one, if we're saying factory wages paid minus the indirect labor. Okay, so that's what we're trying to. It's kind of basically in these problems, we're just trying to separate out what portion was indirect. So we have to say like, what was the total factory wages? So in this was 270 was the total, minus the indirect labor of 63, just leaves us the other portion of the factory wages, which is 207, which would be the direct labor, basically. Okay, so let's see. Manufacturing overhead cost applied. So on this one, we're going to want to find our predetermined overhead rate. So it's 200% of the cost of the direct materials. So we just need to, we have our direct materials up here, so we can just link to that. Times, and we could just say times 2, right? That would be 200% basically. Times 100% would be times 1, right? Times 2, 200%. So just a double. So our manufacturing overhead cost doubles what the cost of direct materials would be, and that's given to you up here. So if you're ever trying to figure that out, sometimes you might have to search for that, but that's what it'll have to tell you somewhere there. So. Okay, total manufacturing costs. So this will be, again, our total of those 3 categories of direct materials plus direct labor plus the manufacturing overhead. And again, remember that was based on our estimate, predetermined overhead rate. And then our cost of goods manufactured is going to be our, again, back to our kind of beginning plus addition minus ending, the BAE formula. And so here we're talking, remember, cost of goods manufactured is we're going to look at the WIP account, right? So beginning WIP plus the addition of total manufacturing cost. So beginning WIP is, what is beginning WIP? 9, okay, plus our manufacturing costs minus our ending WIP of 18 gives us our total cost of goods manufactured. And then we're going to take that total cost of goods manufactured, and to get our cost of goods sold, we're going to again use that same kind of formula, the BAE, beginning plus addition minus ending. But in this instance, we're going to be looking at the finished goods. So beginning finished goods is 54. Our additions, cost of goods manufactured, was 630, and then our ending finished goods was 27. And then the last step, we had a $990 in sales minus our cost of goods sold to give us 333. Okay. Hopefully that was clear. Okay. Let's go to exercise 7. At the beginning of whatever this year is, your co-estimated total manufacturing overhead cost for the year 1,820, and that direct labor costs would total 4,550. So we have to figure out what is the predetermined overhead rate for this year if your co uses direct labor as its allocation base, basically. So if you remember, to come up with our predetermined overhead rate, we always want to have our total overhead costs as the numerator, and then our total allocation base, as it tells you here, basically was using direct labor, essentially. So for what we're saying here is 40%. So if for every dollar of direct labor, we're going to allocate 40 cents of manufacturing overhead cost as our predetermined rate. So, and then here we can say, okay, if we had this job had $280 of direct labor, and we want to times that by 0.4, we're going to have 112. Again, for every dollar, 40 cents. And, so if we have a total, just times that by 40%. During the year, the actual overhead cost incurred was totaled 2184, and so we incurred, let's see, okay, actual incurred totaled was this, and actual direct labor was factory overhead. Oh, okay, so I see this. So in this one, if actual, let me open I need an Excel to do a little math off to the side. For this one, you might need scratch paper sometimes you're doing these problems too. So if our actual overhead was 2184, so that's our real costs, right, that we actually did incur through paying invoices for factory rent, supervisor labor, et cetera. But we are not using those initially. We're using the direct labor cost, right? So we had 4,095 as the base, and then we're going to multiply that by 0.4. So we ended up allocating 1,638 was kind of, if you want to think of like the credit side. So I believe we were under allocated then. Yeah, because so we didn't charge enough overhead to our projects, right? Because the actual costs that we incurred were greater than 40% of 4,095 based on our allocation method. So maybe as we go forward next year, we go, okay, we need to increase this because in reality we're actually spending, if we were to go back and look at this, we said, okay, we actually incurred 2,184, and if we wanted to use direct labor cost as our base, we really should have been applying 53.333%. That's 2184 divided by 4095. So maybe going forward, we say, okay, we need to bump this 40% up to be more in the 50 to 60% range. So yeah, that's a decision we'll look at later in the class too. What is the amount of under or over applied factory overhead based on? So this is the one, then I kind of did this off to the side, but let's do it here in our problem. So 4,450 times 0.4, and that equals, that's going to tell us no right away, but that equals the 18, wait, did I do that right? Sorry, 4,095, I have to do the wrong number, 4,095. That gives us the 1,638 of what we applied. And we're getting the answer wrong because I just wanted to show you that piece of it first. But then if we take that away from 2184, I think I did that. Geez, I keep pulling the wrong number in, sorry. Take that away from 1,820. Can I do that right? Okay. Sorry, my video cut off there. So I had to look at my math here and put the other number in the front because it was coming out negative. So what we wanted to do here, this is how we're looking at we were under applied, was this is the actual. So we actually incurred the 20, told us 2,184. And then I was going to delete that. Again, you'll get a wrong answer, but I just wanted to show you the 1,638 is what we applied based on taking 40% of the direct labor costs. But when we actually came to the end of the year and said, oh, we actually incurred 2,184, that is more costs we incurred that we didn't pass along correctly because our predetermined overhead rate was a little too low. Then we end up with this number that tells us that it's under or over, basically. So okay, this problem is kind of how I would do this problem is for, really I had to figure this out first before knowing that. So just FYI. Okay. I did it in, off to a separate Excel essentially. Okay, let's look at exercise number 8. Scroll to the top for beginning WIP. I'll make sure I'm not missing anything there. Okay. So this is our work in process subsidiary data for this, basically like the starting balances, right? And so keep in mind some of that information for as we go through and apply. Okay. So with that said, we're going to be looking at journalizing these following transactions. So the first thing that we have is a purchase of raw materials, it tells us. So let's increase our asset there, raw materials inventory. And again, on account is kind of the key word there. So we've got accounts payable, and it was 12,600, this tells us. Explanations are already put in, so that's nice. Okay, then on August 8th here, we've got $2,800 paid to repair factory equipment. So it's paid, so not on account on this one, so it's going to be cash. And then those repairs to factory equipment will be just other manufacturing overhead costs. Okay. On the 11th, factory rent of $4,200 is paid. So again, we've got manufacturing overhead. Where we got here? Okay, there we go. And this is paid. It shows the check number too, so that kind of helps us like understand, like, yep, that was paid. It's not, a liability. Usually your landlord doesn't accept rent payments on account. So usually it's a prepayment is required, for rent a lot of times. Or just on the month, or some kind of deposit, etc. Okay, so on the 15th of August, depreciation on the equipment totals $5,600. So again, more manufacturing overhead. And we're going to record, if you remember, accumulated depreciation, kind of a special account for the contra asset account. 5,600. Okay, we're doing good. And then the last one on the 30th, we paid property taxes, we didn't pay them yet. We recorded the property taxes for the factory of $1,400. And again, that's going to be overhead. And in this instance, let's look for a taxes payable account, I think. Yeah, we don't have a property taxes payable specific accounts. So what other accounts payable I think is going to be? Yep, that'll be our selection. And our total is 1,400. And so that, often accounts payable, not that doesn't make sense, that's fine. You might have a separate account for property taxes payable just because it is such a different type of payment than you're going to be making usually with accounts payable to vendors and, suppliers, service providers, etc. So, but it's payable, it's a liability, it works. Okay, right. So now we're going to go through and record our journal entries given the following information for August. And again, remember that we do have some of the beginning information up here. And now we're going to be looking at some extra information to, for August. And this was the beginning of August. So starting balances, Mercedes, Corvette, Murcielago. And then we've got some additional stuff going in there. So we're going to first record. Sorry, I pop up there on my second screen. Okay, our work in process. Let's find our WIP. Inventory of raw materials being into production, right? So we've got a total of raw materials of 16,800. So we're going to want to bring those into our WIP account. Our manufacturing overhead. We want to increase. We want to increase that as we got 700. So that is kind of like our general stuff, indirect materials, cleaning, maintenance, idle time, just random stuff, basically, right? Other manufacturing overhead costs. Okay. And what we're going to be taking this out of is our raw materials inventory account, basically. So that'll be the total. Not rent expense. That's the thing. I'm going to pick the wrong. Sorry. We definitely want our credit there. So the total from here is the total that we take out, for our total material requisition, raw materials issued into production. And all of them are direct materials with the exception of the $700, which would go into our overhead. Okay, and then as far as assigning our labor cost goes, we've got more of the kind of general idle time type stuff, indirect. And so our total for our, let's put it first in, let's do our WIP account first. So similar process here. We want to say, okay, we've got an amount that goes into work in progress and an amount that goes into overhead. And then this is going to be factory payroll. And here we go. We got 14,000 of the direct labor. And then the overhead portion is the 1,400. And then we just, you add those together. It shows us right here what the total is. So 15,400. And we've now assigned our labor costs. And then we'll see this here at the end. So this is all going into our manufacturing overhead. But we're going to apply our overhead using our predetermined overhead rate. And we're going to estimate our manufacturing overhead for the year was 175,000. And overhead is applied based on direct labor hours estimated at 100. Is that 140,000? Yeah, it looks like 140,000 of direct labor. And we're going to use this information to calculate a total allocation of the predetermined overhead. And we're going to be using those direct labor dollars, right? So that's what the 14,000 essentially. Okay, so we want to move this into work, the overhead into work in process. Here's our credit to our manufacturing overhead account. If I can find that. Okay, now we've got to get our figures right. So the first thing we want to do is we want to figure out the allocation rate, essentially, right? So if we are saying 175,000 of total manufacturing overhead, and then our base is going to be our direct labor estimated total dollars. It's still gonna give us an error, but I just want to calculate that for everyone to see. Oh, I can't change the formatting on this, sorry, because these are filled out. But let me do it off to the side on my Excel. I just wanted to. Oh, be able to say, okay, so if we're using this process for the predetermined overhead rate, then again, we're taking 175,000 because we think, when we're doing our budgeting, we say, okay, we think there's going to be a total of 175,000. So you can see the formula here at least. And we want to use as a base direct labor hours. And we think that's 140,000. So in other words, this means that so if we take 175,000 divided by 140,000, then we end up with 125%. So whatever we have for every dollar of direct labor hours, essentially we're going to apply $1.25 of manufacturing overhead. So, which is basically what this says, comes out to 125%. So if we take that and we multiply it by the total direct labor, which was 14,000, we'll get something a little bit higher than 14,000, right? 1.25% of the 17,500. So I just did, and just if you're wondering, so I did this first part. I was trying to show what the percentage actually was, but it's all kind of buried in there. You can't update the formatting on those cells. So I did it off to the side. It's 125%. And then again, just multiply that by the total direct labor. Okay. And then our credit's just going to be the offset there to move the overhead out into work in progress, work in process. And then let's see, calculate the cost of each job by completing the following table. So this is where we're going to want to look back up and be able to kind of take a look and see how we want the beginning with. Oh, it tells us right here. So, oh no, yeah. Or sorry, it does tell. Yeah, it does tell it there. Okay, so beginning whip total. Then we've got let me calculate. I've got to do some additions here. So I think this one then, let's see if this works. Oh, no, I have the wrong pieces together. Okay, sorry, I was pulling in the wrong numbers there. So I wanted to make sure I was pulling that in right as I was telling you all how to complete. So to do our beginning whip, then we're going to want to go back up and look at the very beginning part. We can see we've got these subsidiary data records, and so for the Mercedes, we've got 5,600 of materials, 1,400 labor, and 1,750 of overhead. And if you see, let's do that in the formula. So equals 5,600 plus 1,400 plus 1,750. So you can see the Mercedes across here, materials, labor, and overhead. And that should get us there. Okay, let's look at Corvette. And that was 4,200 plus 3,500 plus 4,375. Okay, we're looking good on that one. Murcielago is going to be 3,500 plus 2,100 plus 2,625. And I think Land Rover, that was 0, right? We just started on that one, that job here. So we're putting 0 in. Cool. Okay, and then we've got, I don't have to scroll as far. So here we can see our current month's requisition information and time data, etc. So our direct materials then here of Mercedes for 2,800, Corvette 2,100, Murcielago was, and I'm getting that off our material requisition forms, 7,000, and Land Rover was 4,900. Okay, and then direct labor, we can come over here again and say, just pulling these off the time ticket. So 2,100, 3,500, 5,600, 2,800. And now here's where we need to work on calculate using our predetermined overhead rate, right? So then I think, what do we have? 125%, I believe. So we need to take our direct labor times multiplied by 125. I'll just do that way. Yeah, that was the right answer there. Okay, and then we've got a formula in here. So one thing we can do in Excel to make this a little easier, we can just drag. Oh god, sorry. Jeez, gosh, I went too far. Okay, there we go. So that's good. Okay, and again, that was taking our predetermined overhead rate, which we figured out here from our budgeting, exercise of taking our estimated manufacturing costs and estimated direct labor hours, right? And then we're figuring out what the overhead is using that formula based on what the actual direct labor is for these jobs. So you can see, C75 times 125%. That's cell. D75, so on and so forth. Okay, and then we can just add these together. Use our auto sum function. And let's drag that across again. Cool. Okay, now we're doing pretty good. Let's see, what else do we have left to do? Now our jobs are completed. And we need to journalize the sales, essentially. Or sorry, the first step to move them into finished goods and then journalize the sale. So the jobs are completed. Oh, I see. Okay, so this is the first Mercedes was sold for that, the Corvette, and then the Murcielago, respectively. So I think that'll all kind of be added together here in our journal entry, but good to know. Okay, finished goods then. Let's figure out any of these go up one. So we're moving something into finished goods inventory, right? It's coming out of work in progress. So we know the totals there. And then we need to look above to see what our total costs are, right? So what are we moving out? We're moving out the Mercedes plus the Corvette and Murcielago. So the only one that's left in work in process is the Land Rover. Kind of makes sense. We didn't have any beginning amounts in there. So, okay, so those three are moved into finished goods, and then we sold them. And so our total sold on account, so that keep that in mind, that means accounts receivable. Still the same credit, whether it's accounts receivable or cash or anything, is sales revenue. And what did it say we sold them? Okay, so we need to add those together. 19,530 plus 38,70 plus 28,103.25. Okay, so that's our total sales amount that we received. And let's take a look and see. Remember, it's a kind of a two-part entry. Anytime we sell something, we're going to have to record a cost of goods sold, which I did not select right. There we go. And then we're going to reduce our finished goods inventory to reflect that we got rid of the goods. They're no longer in our factory or anything. And instead, we have cash incoming, right? We have an accounts receivable. We are owed that money. And that we can link up to what the totals were. So we made about $12,000. Okay. I think that gets us everything there. Yeah, good. Okay. So here you can kind of see, let's just go back through and real quick look what we did. So we purchased some raw materials. We brought those in. We paid for some manufacturing overhead with repairs and rent, factory depreciation, property taxes. So all those things went into our manufacturing overhead account. And then we recorded, those all went into manufacturing. And remember, the first one went into raw materials. And then we recorded increases here into work in process inventory out of our raw materials. And you can tell that total based on the material requisition. And remember that we've got a portion that's overhead and a portion that's direct labor. And then same thing with time, is portion that was direct materials and a portion that was indirect materials. And then down here we have a portion that's direct labor, 14,000, and indirect labor into overhead of 1,400. And then, despite all the ins and outs or what we put into manufacturing overhead, remember we're using a predetermined overhead rate. So we don't pass all those costs along exactly that way. We have to do that later, or we have to account for those differences later, and to come up with the manufacturing overhead amount we do move out, you're going to use this predetermined overhead rate. And again, we figured that out by taking 175 divided by 140 and then multiplying that amount by the amount of direct labor dollars, which was 16,800. Then we added all those costs in, and let's see what else. And this is just kind of the breakdown of the individual amounts too. So if you look here, if you can see the sum of 16,800 matches up to our total here. So you can see how it, these problems are already created for you, obviously, and you're doing them. But if you were preparing these, from the start, you would be making sure that the amounts that go in for the material requisitions would equal, the amounts being recorded. So into the subsidiary accounts, which would be like this right here. So those all tie out. Direct labor, you can see the 14,000 down here, 14,000, and that sums up to the total here. And then the manufacturing overhead, again, that's based on our 125% of direct labor. So we just take 125% times the actual direct labor we recorded. And then we just take these three costs, move those into finished goods because they're done. This is staying in WIP, so the Land Rover account and job is still in work in progress at the end of the month. And then we record the cost of the gross profit, essentially, right? Sales minus cost of goods sold, and that's our profit. So good stuff. Okay, let's move on to the next problem. And in this one, we're going to say engineer company is submitting a bid for a major job and estimates the following direct labor costs. So we say, okay, we think the engineers are going to spend 210 hours on this project. The drafters are going to spend 140. The staff are going to spend 350. And here's all these different rates. I'm just doing a little math off to the side, so I've got those amounts. Okay, so we have no direct material cost, but we apply overhead at a rate of 150% of direct labor cost, and it estimates the competition will bid between 223,177, 272,772.50. Okay, so I'm doing a little math off to the side. So the first thing I did was just multiply the hours times the rate because I wanted to get our total actual estimated direct labor cost, and that if you add that all up, it's 76,300. And so I think that's the question actually for this very first one. And here I'll show you in a formula just so you can see. So the 210 times the 250 per hour, right? Because we've got 210 hours at 250 per hour. And same thing for the next employee class. And plus the last one of 350 times 20. So adding all that together again, like I said, equals 76,300. So you can see the formula of how I got there. I did it off to the side on my spreadsheet as well. Okay, and so what is the estimated cost of the job with labor and manufacturing overhead? So we just need to take our direct labor is going to be that we estimate, and then we're estimating that the MO portion, the manufacturing overhead, is going to be 125% of what that total is. Wait, what did I mean? Oh, sorry, not 125, 150. There we go. Got to have the right allocation rate there. I was still thinking about the last problem with 125%. Okay, let's see here. What should the company bid to earn a 30% profit on the cost? So if we wanted to make an extra 30% on top of this, we could do this in using a formula. So take our total cost, and 30% above that would be 130%, or you could multiply it by 1.3. either one of those will work math-wise. So we need to bid $247,975. So our bid is kind of like right in the middle. So that's kind of interesting. Probably good. Not too high, not too low. It's a good place to be. So, all right. Hopefully that makes sense. Again, it's just these exercises to figure out predetermined overhead rate and be able to use that to calculate out your allocated overhead. That was okay. And the only portion I didn't really walk you guys through was the matching piece. But again, that's pretty easy. Look in your book and your other reference materials to figure out that matching portion there. All right, I will make a separate video going into some of the discussion questions, the quick study, the exercise, and then the problem. And keep an eye out for that video. And thank you all for following along. Hopefully everything makes sense. And we'll do a lot of practice in class, but be sure to, if you have any questions about anything as you go through, definitely bring them and we'll work on the problems together.